Hello, good afternoon. This is Neil with Simpler Futures. It is March the 8th, Wednesday afternoon, just after the bell here. So last we were together was Monday. We were looking for a little kind of pullback, turnaround Tuesday, and then a bounce. We have not yet seen the bounce. What we have done is returned to this all very important, incredibly important 39.90. That is... That's balanced. I mean, that goes all the way back to November of 2020 to present. You're going to find that as being basically the most traded price in terms of volume on various time frames, including that one. So this is the return to balance is what we are right now. So if any update, here is my update. I'm going to lower the overhead, anticipated overhead resistance to bullish targets and overhead resistance at 4032 and 4050, 4032 and 4050. 4050 is the newsprint. That's where SPOOs were trading the other day when Powell started talking on first opening statements of Humphrey Hawkins. We're past that, by the way. That was yesterday and today. Tomorrow, well, tonight, first of all, Chinese inflation data, both CPI and PPI. Tomorrow, BOJ's policy statement and decision, and that'll be a closely watched one because they're under new leadership here recently. And then Friday, non-farm payroll binary event, but I'm choosing down because from ideally this bounces up and tests 4032 and maybe 4050 and then it rolls. So I'm lowering the overhead down to that. And I'm choosing down on Friday because it's the beginning of the rollover where, let me show you, I think it's the Analyze tab, where we go, ES. So this is a question I got in the comments about how this works. So you can see here that we're going to roll from March to June. So the outgoing contract is the March, the new incoming contract that'll start the process on Friday. You can see that the new one's 4033, the old outgoing March, the one that we're in right now, is 39.95. So the difference between the two there is what, 38 points or something? So I just call it 40, but 38 some odd points. So the rollover gap rule is the new trades to the old. Well, the new one's going to be June. How is that going to trade to the old one? It's got to go down for 40.33 to trade down to 39.95. It's got to go down by 40 points, right? So that's a bearish rollover gap. Now, what else is going to happen here is when we come in Monday morning, next Monday morning, the widely accepted contract as the new contract is going to be this June contract, ESM, and you can see that's 38 some odd points higher, right? Well, the SPX is still going to be down here, 5 points away from lower, that is, by the way, 5 points lower than even the March contract. So that's going to put about a 40, almost basically 45 point spread between the futures contract and the SPX. That's a big deal. I mean, that spread will work its way in over time over the period of June, well, into June, March, April, May, into June, right? Over that period of time, that spread will come in. The reason for the cost difference and the price difference on these two is you have to take into account. See, this used to be really tight. The spread would be really tight. But remember, at that time, money was almost free. I mean, the interest rates were basically zero. So there's no cost of money. There's no cost of carry, right? There's a cost now for money for that period of time for a $4,000 product to be carried from March all the way into June. And there's also the cost, the opportunity cost of the dividends that the S&P 500 stocks pay. So the difference it's basically a time value of money that the further out you are, the more expensive that time value of money is. That time value of money decreases as the time window narrows, the narrowing of time between present time and that June expiration. As that time narrows, that cost of carry also comes in. The potential for realizing of dividends also comes in. So the spread comes in. So that's the deal. That's the reason for the spread, and that's the way you get a spread, and that's the way and the reason that the spread comes in and how it comes in over time. So to start this process off, though, as of Monday morning, you're going to be looking at an S&P contract that's going to have a 40.33, ish. I mean, by comparison right now, in today's numbers, it would be a 40.33 price against a 39.90 SPX. And, that's obviously 43 points. I just call it 45, kind of easy math, but that's a big, that's a big spread. So I guess the question was, well, do you do the trade? Is the same trade available, the rollover gap trade available in the SPX? I mean, no. The spread, the rollover gap will close and narrow over that period of time, that window of time, March all the way into June. The rollover gap between that June price and that March price that you see right there will happen in a very short period of time. That would I anticipate, what I'm telling you to look for is probably on Friday afternoon. The last one happened very quickly in a matter of minutes, Friday afternoon, where what will happen if this works, what will happen is the SPUs are just out of nowhere, they're going to break 40 points. Just boom, just like that. Just, price will come in. And if that happens and happens in pretty short order, and the move happened to be right at about 40 points, then you'll know, okay, well, that was essentially the rollover gap coming in, All right, so hopefully that makes sense, but that's the way that goes down. I'm going to treat bounces here as, sellable / overhead. The bounces I've given you, the levels, that's 40, 33, and 50, and we're going to look for those to be sold for a continuation. If we get this right, I'm just proposing this is the trade that I've got on anyway, and that is for a continuation then of the down tick into the options expiration on the 17th. And I've got 38.50 SPX fly. I don't know if they'll get that low, but I can see where, I can see where, let's see. You can see where they get down. They get let's see. 38.70. That's pretty darn close, right? So the flies that I have on anyway are 38.50 for the March UpX. Maybe that's a little, a little much, as far as trying to really pin it. But if it even gets in that general, kind of area down there, then obviously they'll have quite the lead on them. They already have a nice lead on them. Because I put them on 50 wide and paid like $1 for them, so they've already got a nice lead. I don't know that you want to put that trade on now. You should already have that trade on if you want it, not that you want to go putting it on now. I'm explaining my reasoning for that being target, really more than anything. And it comes from it's being balanced back here on this lower distribution down here. And essentially it's got one of those EOQ settle prints down there into quarter settles also. And with that, I've still got, 9 days to allow that the opportunity to, kind of play out if it's going to. So, don't put that trade on now. We've been talking about that trade for a long time. If you wanted that on, you should have already had it on, paid a lot less than, what it is now. We've got the 4065s on for March 31 also. Those are 50 wide. They cost $2.70. Today they're at like $6. So I don't think you want to put those on now either at a $6 price versus where they were when we started this whole thing at half of that. What I'm doing is I'm giving you the idea and the reason for the targets that that I've got down there. That's really the crux of this. So hopefully this video, what we've done is we've said very little update to Monday's video. The update is lowering the overhead, and other than that, it is stick with the plan, and that is for the continuation, is anticipated at least, continuation of the down on Friday, and that is because of the pit bull low, the rollover, and the non-farm payroll report. Non-farm payroll, of course, being binary, there's no telling which way that's going to go, but I'm picking down because of the roll. And then continuation for next week into the 17th, where then we're going to start talking about long again. That's it. That's what I got. Hopefully this makes sense and helps, and let me know in the comments if that answered the questions, because I did get some question on about the SPX and how that kind of fit into the rollover trade, etc. So the idea here was to sort of explain where that comes from, where the gap comes from, how it gets filled, and etc. I'll be back with you again next week, so we'll see how the rest of this week goes, and update again next week for continuation of our plan. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me